Ladies and gentlemen, welcome to day 2 of our August webinar series, all about setting up a company in China. We are looking at 5 different topics this week surrounding the theme of setting up a company in China. Yesterday, we did a big overview around the idea of the 9 key considerations that have to be made when establishing your company. It was very much an overview of what you have to think about prior to actually submitting those documents and setting up your organization in China. In the next 4 following sessions, so Tuesday, Wednesday, Thursday, and Friday, we're looking at what I consider to be the 4 most important decisions that have to be made surrounding your company in China. So let's get cracking. We've only got 1 viewer on right now, so I'm going to skip this slide about who you are, because I know the attendee quite well. But generally speaking, I always ask my registrants and attendees to let me know a little bit about their backgrounds in terms of what stages they are at in their China journey. It is still August, so I know a lot of people are on holidays and will be seeing this later on at their own convenience. But if you do have the opportunity, do type in the comments when this is posted on YouTube about what stage you are at. Are you a newbie? Are you a startup, or are you China experienced 10? How the webinar works is we use Zoom meetings. So just very briefly, if something happens on my side, I run into any technical difficulties, it takes about 60 to 90 seconds for me to reboot. Usually it'll be with my Wi-Fi connection. If anything happens on your end, just log off, log back on, and it should then work itself out. If it doesn't, then just know we are recording today's session. So you will be able to review the recording later on our YouTube channel. How this webinar works is I'm here to educate and teach, again, around the theme of setting up your company in China. If you've got any questions, please insert them into the chat box, and we will get those questions and comments then answered. The China expert for the week is myself. We don't have any guest speakers, but just briefly to introduce myself, my name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I'm a leading expert on inbound investment into China. I've been in the Chinese market for the last 17 years in the corporate services and compliance sector. My focus is helping foreign clients with their market entry as well as their growth in the Chinese market and Hong Kong market. I have worked with over 500 companies, all at various stages of their China journey, whether it has been in the pre-investment stage, implementation stage, or their growth stage. Ideally, we always want to get 100% of our clients into that growth stage where they can scale up in the Chinese market and get profitable much faster and much quicker than others. The beauty about the Chinese market has been in the last few years that we have been able to create methodologies and system processes. And I've created a variety of different webinars on this. I did them all in the July webinar series, and they are up on our YouTube channel if you want to review and see them. One of these methodologies is the China Incorporation Blueprint, which I focused on yesterday. That will be up on our YouTube channel by the end of the week, so you'll be able to review that as well. Just a small note, in 2020, I wrote a book about the 9 superpowers to succeed in China. The book is really there to highlight 9 different principles that I would like foreign investors to follow in order to avoid the biggest obstacles and roadblocks that occur in a foreign investor's journey in China. After 17 years of issues that I have experienced or that my clients have experienced, I've come down to summarizing that in 9 principles where it gives you the guidelines to really have action plans and checklists to get things done, to make sure you're protecting yourself, your company, your employees, your investors when going into the Chinese market. The book can be found on Amazon, on any of the Amazon platforms, both in Kindle and hard copy version. So let's get cracking. So today we are looking at part 2. We're on day 2 of this webinar series, where we're looking at how much startup capital is required for the China company. And ultimately, what we're looking at generating is the registered capital amount that is needed to fund your operation in China. And the idea is, how do you get to that number? How much money do you actually need to inject into your company to make sure that you have the capability to pay off all of your expenses, whether that's salaries, rent, which are the two main ones, but also suppliers, advertising costs, marketing costs, etc., without running into any difficulties, right? Where you are asking for more funding, more financing, or where you get to a stage where you may even have to exit the market because you don't have the financial resources on hand. For me, this is a really important topic because ultimately companies are not creating their budgets thoroughly enough to then know how much capital they actually need to be able to sustain their business in China. So let's get looking at that. What are we covering today? We're covering the fact of why is it important to create a good, solid budget? How can we create that budget for the Chinese market? And then how can you check that your actual numbers match your budget along your China journey? Because it's all well and good to create a budget, come up with a registered capital amount, which is your investment amount, and then not track how that money is actually being used and that it's being used in the correct way, that you don't run out of it so quickly. So normally, if I would have more attendees on, but I know everybody's on holiday, I would be asking, who's a numbers person? One of the conclusions that I've made over the years is that particularly with small, medium-sized companies that are going into China, the person who's responsible for the China business is not necessarily a numbers person. They might be a salesperson, they might be a merchandising person, they might be a marketing person, and they know the numbers of their division, but they don't necessarily know how to create the numbers for the whole organization. Everything from sales, cost, all the way down to general administration expenses. And that's an issue. Because if you don't have a numbers person guiding you to create your budget, you're not going to be able to create a solid budget for your organization, to really know and have thoroughly thought about every single line item that you need for your China business. So let's talk about budgeting for China. Now, for most people that aren't numbers person, the one thing they're going to procrastinate on is their numbers, right? Because for them, they feel that if they're a salesperson, well, the budget will create imposing constraints and will impose very high targets and goals that are achievable. Well, we want goals. We want high targets to be achievable because we're going into the biggest market in the world, which is China, where there is tremendous opportunity for your business. So we should be having high targets, okay? And we should get excited by those targets that are being set. We should not consider budgets as constraints. We should consider budgets as guidelines to making sure that we are growing in the right way, that we're not losing time, because traditionally, most foreign investors, they will move 2 steps forward in China and sometimes 5 steps backwards because of roadblocks and obstacles that go in their path. We want to create scenarios and try to predict as much as possible and try to foresee as much as possible within our budgets as well, okay? So the budgets can be seen as something that's very negative. I see it as something that's very positive, that is utilized to create excitement and vision for what you're trying to achieve in the Chinese market. But again, if you're not a numbers person, you will see this as a constraint. You will procrastinate and not want to do this activity properly, or get the guidance even from other people who are numbers people in the finance department to help you to properly create this budget. Now, many of you might think, well, every company creates a budget going into China. They do. They create budgets on scraps of piece of paper. They create budgets with just lofty numbers for the key items: revenue, cost of goods, general administration expenses. They just throw out things out there. And then because they see a scale in China that's tremendous, it's not all properly calculated. All right, and I'll explain what I mean when I go throughout this presentation. But it is so important to get these numbers as close to the reality as possible. So I've listed a bunch of benefits, and this slide is really for those of you that are not numbers people, where you might be procrastinating quite a bit on not creating your budgets or not creating them thoroughly. First of all, because in China, you've got registered capital, which is actually the working capital that has to be injected into your bank account, you've got to control that. One of the biggest mistakes that I see is that people are left with zero in their bank accounts to pay salaries, rent, and sometimes for 3 to 4 consecutive months, because it takes time to get money into the country. Okay, so you do need to have a financial controlling system in place on how your registered capital is actually being used before you even start generating revenue. All right. Creating the budget keeps you focused on the investment goals, which is something critical if you've got investors on the other side, right? If you are simply reporting to a board of directors, they will also want to know where their money is being spent on, what their money is being spent on. If you've got several investors, well, they will also want to know how the money is being spent. And most importantly, when are they going to get their money back, right? So the budget also, when properly used, makes you aware of what is going on with your money, what's going out, what's going in, what's the balance, etc. It helps you to organize your spending. And what I mean by this is that in China, there are a lot of opportunities that come up for advertising, marketing, for trade shows, whatever, that cost a lot of money. You know, I've got a client who's attending a trade show in Shanghai, and they're going to be spending about 150,000 RMB just for that 3-4 days. This is not peanuts, right? So it helps you to organize your spending and know what you're going to be spending on in all areas of your business, starting with marketing, branding, all the way down to client acquisitions, all the way down to rent, salaries, headcount, travel expenses. All of those items have to be considered very thoroughly. It makes you decide in advance how your money will work for you. And what I mean by this is that you can plan a marketing budget for a year. Again, a lot of opportunities will fall on your doorstep in that year. You either have to be firm and say, no, I've already decided on what we're going to be doing, or you say, yes, I'm going to take that on that opportunity because I feel like there's going to be a high return on investment, but then I have to cancel something else out because I don't have the money available. Many companies who don't have a proper budget in mind, but have everything in their head, will decide to do both. The one that's already planned in advance, and then the one that falls on their doorstep. What's going to be left over? Nothing. Because by the time that return on investment happens from that marketing project, it's going to be months before you see revenue coming in. It won't be overnight. So you've got to plan in advance. What is your strategy and tactic for China? How are you going to spend that money? And then you can make decisions along the way. It enables you to save for expected and unexpected costs. Okay, so COVID created a lot of unexpected costs for people in China. And those who were well prepared and had nice cash balances were safe, and those that didn't were not. Okay. Now, things like COVID are rare. They don't happen all the time. It's once in a century where you get a pandemic like this. But there are other smaller obstacles that might fall on your doorstep that are completely unexpected to take you off guard, and you're left without money. And you need to have savings and cash available on hand for moments like this to get you out of the rut and help you to continue to grow and move forward. Investors can be a pain. They can be difficult. And if you don't have the ability to speak to them in numbers, then you're going to have a lot of difficulties in communicating them on the progress of your business. So what you need to do is make sure that you know your numbers inside and out, and you have the ability to communicate with your investors about that. It provides you with an early warning for potential problems, whether that is delays on customers paying you, and hence you've got to delay payments to suppliers, or whatever else might happen, okay? Or rental increases that were completely predictable, and then making quick decisions on what has to happen. It helps determine if you can take on debt or not, and it enables you to produce extra money because you're able to see very clearly once you go into the details where potentially you can make more revenue. Now, the biggest probably difficulty I see people who aren't strong with numbers is actually putting pen to paper and writing the budget, right? And I just did this exercise recently with a client where we took an Excel and together we created the budget line item by line item. Not perfect in the first draft, but as perfect as can be within an hour and a half of getting it done. So if you need to create a budget and you need to start off with a draft, where do you begin? All right. So let's start off with the basics. What are the projected sales for the budgeted period? So normally what I would say is look at a 12-month period. In China, the fiscal year is January to December. So let's look at the calendar year from a January to December point of view. Okay. And what are your projected sales? And ideally for me, what I do is I would recommend doing it month to month. Okay. And then when you're thinking about sales, think about the various line items of revenue. If you're in products, is it product A, product B, product C, product D? Go into the details. If you're service, well, how many service line items do you have? We have a lot. We have incorporation, we have miscellaneous, we have recruitment for finance roles, we have XYZ, we have a variety of different services we offer. Now, going into the nitty-gritty, although it is painful initially, will also help you to analyze how those various sales for those various products or services is going. Because then you have to evaluate, do you take something off the market? Do you add something into the market? Do you need to adapt a product? And it helps you to analyze whether you can afford to do that. So when you're creating your Excel, you've got in column A, all of the detailed sales line items. And then you're looking month to month how much you're going to create. Now, if you've got a history of sales in China, this should make it a bit easier. Use that history of the direct transactions between your headquarters and China to analyze what has been generated with what type of products, with what types of services, and take that as your starting block. Fantastic that you have one, use it. Okay. But remember, once you have your company in China, you're converting everything into RMB. And you got to think about it then in renminbi terms. Okay. If you don't have a history in China, you've done 0 transactions. Well, at that point, then you've got to look at market research data. You've got to look at where you're going to be selling. You've got to start having discussions before you can even fill out these numbers with the various customers to see what is the potential for the market. And again, don't always believe what's being said to you. Don't overestimate, because initially they'll say, okay, we might buy from you 6 containers, but they're only going to start off with maybe 3-4 pallets. Okay. So don't overestimate and assume that that 6 containers is going to happen in year 1. It might happen over a series of years until they get to know you better. So estimate initially maybe 1, 2, 3 pallets first, or however you calculate your products and your services, because you don't want to have problems in the future of overestimating and then outbalancing what your P&L looks like. Because if you overestimate and you've got low costs initially, of course you're going to be profitable. But I doubt that that will happen from day 1. Then you've got to look at the direct costs of those sales. Okay. And when you're looking at costs, this is not complicated. Here you can actually contact suppliers and get quotes and use those quotes within your budget. Yes, is it work? Absolutely. But you've got to understand what the cost of materials are, the components. Are you subcontracting? Who are the logistics providers? You're going to put all of this within the direct cost of sales. If you are in service, what's the manpower required to fulfill those services? That you'll also put in your cost of sales. So understand what that is by simply reaching out to your various suppliers, logistics providers, freight forwarders, to your service providers, to get quotations and estimates from them to formalize your estimated direct cost of sales. And then finally, you're looking at what are your fixed costs or overheads, which again, there is just a matter of contacting suppliers. Rent. Well, if you're going into a business center, contact 3 to 4 different business centers and get quotes from them and understand what's the rental price and the management fee. If you are hiring people, well, there are salary guidelines that can be found all over the internet that are free of charge for China, where you can get ranges of salaries and you can create a budget on how much you're willing to spend for certain roles. However, when you're talking about salaries, don't forget to include social insurances, bonuses, commissions, in order to understand exactly how much you're going to be spending on an individual. So just to reemphasize the previous slide, we're looking at projected revenues and sales, right? So you got to look at sales history if you've got it. Some people might not, and how effective you expect your future efforts to be. Okay. The key is obviously making sure that you reach out to customers and you see what is the potential in the market for your products. Nobody can do that without market research and data. Okay. So for example, if you're looking to get into the e-commerce side of things, look at, I don't know, make a list of 3 to 4 of your competitors that are already selling on e-commerce platforms. Look at those e-commerce platforms, look at their pages, see the number of sales. This data is on there. Now, if you don't do it, you can outsource that to a provider who does do that. A lot of media agencies might do it, and they might find out that data for you. All right. It is important to do this type of budgeting to know exactly what your margins are, what your ratios are, and what your return on investment will be, and how quickly that return on investment will happen. Projected costs. Okay, again, you've got 3 kinds of costs. You've got the fixed ones, which is rent, salaries, financing capabilities. So again, it's about talking to your bank. You got the variable costs, raw materials and overtime, which are always tricky. And then you've got the one-off capital costs. So renovation, computer equipment, etc. Okay. The key is with costs, though, is that it's so much easier to get quotations and direct information by simply contacting suppliers and doing a benchmarking, right? So whether it's rent, contacting 2 to 3, 4 providers, salary guidelines, look at 2 or 3 salary guidelines to get ranges. Banks, talk to 2 or 3 banks. I highlighted it yesterday. You know, you need to formulate a relationship with your bank. If you need financing capabilities, understand whether that's on offer from the bank. If you're looking to buy office equipment, contact 3 to 4 different providers to understand how that can, you know, what are the price differentials, and understand who you're then going to work with so you can insert that into the budget. When you're looking and getting quotations from suppliers, look also at the validity of that quotation. Some people will say this is only valid for 90 days. Some people will say this is only valid for 30 days because they may be increasing their prices over time as well with inflation. When you're looking at fixed costs and overheads, right, I wanted to provide some insight about China. So I've made a list here of the basic standard expenses that should be put into your budget. Costs of premises, you're looking at rent, management fees, municipal taxes, and service charges for me are the management fees. Staff costs, you're looking at wages, social, so by wage, it's gross salary. You're looking at social insurances, allowances, commissions, bonuses. In terms of utilities, you're looking at electricity, telephone, and broadband, and any other utilities you might have. Printing, postage, stationery, don't underestimate that because courier costs are cheap in China, so everybody uses them. Back in the day, we actually had an office boy who did all of that running around in terms of, and what we had done was, why did we get an office boy? Is because we were looking at our postage fees against the salary of somebody, and it outweighed that. So we made that decision. We did that by creating our budgets and doing these types of comparisons, because ultimately you always want to keep your costs down. You've got vehicle expenses. So for example, if you're an expatriate and you're being offered, I mean, that could go under allowances. I would probably separate that out. If you get a car, company car, or if you actually purchase vehicles for your company for whatever reasons, equipment costs, machinery costs, advertising and promotion. Now, this is one where, again, people get very excited about. They plan everything in advance, and then opportunities fall on their doorstep. And then they just add into this budget constantly. Advertising and promotion is probably the one area, particularly in the startup, that gets a lot of companies into trouble. Travel, well, now with COVID, this is going down, 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 because people can't travel. But this used to be a big part of the expenses, where people would go for 2-day business trips to Europe, or Europe would come to China and China would have to cover those costs, whatever it was. It is important to understand whether travel is still required, because I think COVID has taught us that maybe it's not necessarily required. And it's also really important to understand what the costs are associated with that. Legal professional costs, so this is anything to do with insurance, legal fees, accounting fees. One thing I didn't add inside here was banking fees. It is important when discussing and choosing your bank to understand what the banking fees are. I always get surprised. We use ICBC, and sometimes I get surprised by certain transactions and at what value they are at. So it's important to get that kind of guideline ahead of time to know how that falls under. So this is just an overview, right? You and your specific business might have other types of costs and overheads. It's a matter of getting started and then going really into the nitty-gritty details, okay? Now, if it was me, when I create my budget for premises, we have 2 line items. One is for, because we're in a business center, we actually have 3 line items. One is for rent, one is for management fees, and one is for any miscellaneous costs associated with the business center. So boardroom meetings or whatever, coffee or whatever it might be, okay? When you're talking about salaries, I also break that down into salary, gross salary, social insurance, allowance, which I then break down into what allowances, commissions, and bonuses. The idea of breaking it down into the nitty-gritty is so that you can analyze that nitty-gritty over time. Now, one thing that I was highlighting yesterday is cash flow. And even companies that have the ability to create solid budgets don't look at their cash flow. Which is why when I create the budgets, I look at it from a month-to-month basis. So my budget almost becomes my cash flow as well. It is important in China to understand when things have to be paid, okay? Why? Because when you've got your registered capital, you've got to make a plan of how much is going to be put in and when, so that you don't run into any issues along the way where you have no money to pay for salaries, to pay for rent, to pay for any advertising, marketing, whatever might be popping up, all right? You don't want to get into any of these difficulties. And again, I highlight salaries and rent because usually those are the first 2 things that have to be paid on a month-to-month basis, where a good 40% of my clients run into difficulties. And we've had clients who have had situations where they couldn't pay salaries for up to 4 months because there was no money in the bank account. Okay, and it takes time to bring money in. And if you are in a company which requires approval, to get approvals and all of this, it can take time. It's embarrassing to hire people and then not be able to pay them. That does not instill any form of stability within your organization. So creating a cash flow statement or a projected cash flow report to understand what are your monthly costs, when are things going to be paid over the next 12 months, gives you guidance on what is your payout month to month. And ultimately, what are you going to be spending in a year? That can then turn into your registered capital amount. But you might want to do that not just over 12 months. You might want to do that actually over 24, 36 months, over a 3-year period. So you can see how much physical cash do you really need to sustain your organization in China? Because again, 40% of my clients make this mistake. It's a huge pain point. All right. We can create beautiful budget sheets, but if you don't know how much you're spending month to month, and it's all in your head and it's not physically on paper and it's not clear, you will run into difficulties. Okay. So using your cash, creating that cash flow is really, really, really vital. Now, for me, these are the 3 reasons why I create my budget in China. Okay. And predominantly because we're consistently scaling up. And most companies that are doing well in China are consistently scaling up. So the budget needs to be used against your business plan, i.e. your strategy, in order to actually create the financial action plan. So you've got your budget, you've got your strategy. So probably first you've got your strategy, which creates the budget, and then the budget creates the financial plan. Okay, i.e. for me, the financial plan is really the cash flow report where I analyze how much is going out every month, what's coming in, what's going out. I recommend to go really into the nitty-gritty detail, which can be very hard, but don't forget budgets and financial P&Ls are all flexible documents. So going into very detailed line items so that you have the ability to benchmark your performance year on year, not just the overall performance of the company, the actual performance of every single line item. I had a call yesterday with a company and I asked them, what percentage of your revenue is service A and what percentage of your revenue is service B? He had no idea. He could not even tell me how he classifies his revenue because he doesn't classify it. And he doesn't do this type of analytical work. So that led on to him struggling with doing marketing and advertising and knowing how much he can spend on that because he didn't know what was bringing in the biggest amount of business and what was bringing him the least amount of business. And he also didn't know, because when I asked him, where would you like to place focus on? What actually gives you joy? He didn't really know. He didn't know where to place his focus. One of my biggest things about scaling up in China is that you have to have focus. You have to know what you're spending your money on and where you're getting the most of your revenue from. You have to do this type of analytical work. And if you don't have time to do it, you've got to start delegating work to other people. So creating your budget from day one with this nitty-gritty details, this nitty-gritty breakdown allows you year on year to analyze your performance, not just with revenue, but also with your costs. There might be these exceptional costs that might never happen, and you've got to explain those. You've got to know what they are. Okay. And then you've got to use your budget and the nitty-gritty details to look at the key performance indicators. What are the drivers of your business? Now, every company has different set of drivers. Okay. For me, my biggest driver is costs of service, because I want to keep my headcount down and I only want to have performing individuals on staff. I want to limit my training costs. And if necessity arises, I want to be able to outsource to qualified individuals who have the ability to do the work. That's a big driver for me, but I'm always looking at the costs around that. All right. Other drivers will be rent. One thing that I've done with COVID is I've cut down my space to save cost. Another thing that has been a driver for me has been marketing costs, which I've broken down into such detail. To give you an example, Zoom is just one line item for me. And I actually changed software systems because of the cost associated with the previous software I was using. All of these little nitty-gritty things have helped me to reduce my costs during COVID and really go into the nitty-gritty details. okay? What I didn't want occur during COVID was to have any cash flow problems. I knew that my profitability will fall because there was going to be a lack of investment going into China. That was due to the scenario of the pandemic. But I at least didn't want it to fall dramatically enough to cause issues within the organization that we couldn't scale up as soon as the pandemic was over. Okay. So again, looking at the cash flow, looking at the budget helped me to reorganize. And something again that people have to get used to is actually, I was not doing this previously, but COVID taught me this, is actually looking at your budget with your actuals on a month-to-month basis. Don't do it quarterly, do it month-to-month. Look at it month-to-month so that you can adapt, change, and pivot your organization at that moment in time, because you need to react quickly. Okay, like I said in red here, the budget, the forecast, the cash flow can help you spot problems early if they're not calculated on a consistent basis and they're not reviewed on a consistent basis. So for me, really, the key about the budget, which is something I really do use month to month, and I reforecast month to month, is that it gives me a sound financial plan, cash flow plan. It gives me benchmarking year on year. And because I have drivers, it helps me I highlight those drivers every month. So I have an ability to have an overview of that and able to dive in much deeper on it. So it is something that has to be used. And again, I just want to reiterate, you don't have to be a qualified numbers person to be able to do this work. You will learn as you go. It'll probably take more time initially as you learn what you're looking for. And I just also want to highlight my husband, who is a qualified CPA. Even when living in China initially, he had to learn everything because you're following PRC GAAP regulations, right? So it was a learning curve for him as well, who knows numbers, to understand what everything was meaning, how things were booked, how things should be booked under the PRC GAAP regulations. So don't, whether you are a qualified numbers person or not, you still will need time to understand how it works in China, regardless. So now we're getting down to the one number we need to register your company in China, which is the registered capital. Okay, so what is that exactly? So there are, for me, two different types of structures, different types of entities in China. One is a representative office, which is rarely established, but you will have the occasional. And one is a limited liability company. A representative office has no registered capital. Okay. Instead, it has simply expenses because it has no revenue. All right. The revenue will be generated in the shareholding company, and the rep office just pays for expenses. However, the Chinese government has said that the representative is assisting to generate revenue, and as such, it needs to declare taxes in China based on its expenses. So the rough estimate is that you're paying 10% on expenses. And the expenses have to be booked. You can't just say, oh, well, the rent is paid by the shareholder, so we don't have to book it. Well, you do, because the rep office needs to have a registered office address. The rent has to be declared in the books. All the salaries of the employees in that entity that are residing in China have to be on those books. All the expenses that are incurred by those employees have to be put in those books. Okay, and these are reviewed through an audit at the end of the year. Now, a limited liability company, which I highlighted yesterday, can be a WOFE, FICE, JV, whatever it might be. This is a company that actually transacts, whether it's service or in products or goods. Okay, and it needs an initial capitalization to start. Okay, now in the Western world, you would probably distribute a loan to your subsidiary. That would be the term that's used. You distribute a loan that's eventually paid back. In China, we don't use the term loan because a loan is considered something else. There's an initial capitalization, which is called the registered capital. Okay, and it's the money that is given from the shareholder, put into the bank account in China, that is actually utilized to pay off your expenses until the revenue that is being generated can sustain the expenses that are occurring within the organization. So what we're trying to do is figure out what that amount is going to be, because we don't want it to be too high and we don't want it to be too low. Okay. When you are registering your company in China, there are two numbers which have to be submitted to the Ministry of Commerce. One is the total investment amount and one is the registered capital amount. As I highlighted yesterday, the total investment amount, according to the new I shouldn't say new foreign investment law, according to the current foreign investment law, does not need to be declared. However, in practice, it still needs to be declared. So I've added it in here that the Ministry of Commerce needs two numbers. The registered capital is the actual money, the working capital that is injected into the bank account in China. There is a ratio against the total investment amount. Give you an example, if it's under 500,000 USD, there's a 7-to-10 ratio. 7 registered capital, 10 total investment. The total investment reflects the total capital that is perceived to be needed for the project in China. The registered capital is the actual working capital that is needed to start the business in China, to initialize that business in China until the revenue is floating in to sustain itself, okay, and to create basically a cash flow positive situation. There are no minimum capital requirements in China at all, which forces people to create a budget to know exactly what they need. This law was eradicated many, many years ago now for this reason. People wanted to, most foreign investor companies were just going with minimum without realizing that they might need more. And the problem is you always need more than you expect in China. When you are trying to calculate your working capital, your registered capital, like I said, it's important to understand your budget and your cash flow needs. There are two things I always ask clients when they're in their market entry phase. It's one, do you have the financial resources to go into China? Meaning, have you created a budget to know how much you need to go in? And two, do you have the time resources? Do you have the headcount who is dedicated and designated to the China operation? Because time and money are critical, right? Now in China, you need to invest enough funds to sustain the company. And many people make the assumption that they can generate revenue very, very quickly, which is not always the case. So you might have customers already in line where you are able to transfer the contracts to a local contract where you believe you can start invoicing and get paid immediately. Now, what is unexpected is you might be able to transfer those contracts quickly. You might be able to issue those invoices quickly. It doesn't mean that you will get paid any faster. In fact, you might even find that by having a local entity, you get paid much slower than you used to. So you have to make sure you put that assumption into your cash flow and into your budget. Okay? People in China tend to get lazy. They don't always pay you on time, and you have to be prepared for that. What we have found is that almost in all situations, foreign investors and multinationals are the worst payers in China, and you'll find that local private Chinese companies are the best. I'm generalizing here, but that's a little bit the trend that we're seeing. Okay, so estimate the delay on payments, which means that you still need to have enough registered capital to, again, sustain your company with the idea that you will have delayed payments. Okay. The worst question I receive, I hate getting it, is when investors or companies come to me and say, Christina, I just want to put in the minimum. And when I say, well, there is no minimum, and they say, well, what's the, can I put in 10,000 RMB? I'm like, well, what's 10,000 RMB going to pay you? What are you going to use that for? Oh, well, I'm going to get paid within the first month. I said, are you 100%? Can you 100% tell me you will get paid within that first month? He's like, oh, well, no, I cannot guarantee it. I'm like, well, then I would put a little bit more. Companies want to put in the minimum. They want to as little as possible without really having guarantees behind that. Again, you don't want to get into situations where you hire people that are new to your company, where you want to have stability so that you can grow. You don't want to get into a situation where you're spending more than 50% of the time recruiting people and having such high turnover that you have to constantly train. Why would you want to do that? The minimum of respect is to pay people salaries on time. But if you don't have the money in the bank account, and I emphasize on this point because it happens so much, at least one client a year this happens to, then I want people to realize it's not a joke. You're going to be spending more fixing these types of problems than if you just get it right at the beginning. So don't focus on minimums. Don't focus on the less liability. Focus on what do you need to operate your organization in China. And again, like I highlighted yesterday, things are not as cheap as they used to be. Working with media agencies is not cheap. Rental prices in places like Shanghai are not cheap. Salaries are getting higher and higher. So, don't expect that China is a cheap location any longer either. And again, make sure you're contacting suppliers to get that data. As an action plan for being able to calculate the registered capital that you need. One thing, and again, I don't like point one. I said this yesterday, I'm going to repeat it again today. I don't like point one because again, my philosophy is figure out how much you actually need. But I do want to say, because it's the reality, is the Ministry of Commerce and the Tax Bureau do like to see companies that have at least registered capitals of more than 1 million RMB. That doesn't mean you're going to get any forms of benefits. They just get an impression of you that you are more solid in the market. And it probably comes from the history that the minimum capital requirement was 1 million RMB. So it's more of an image thing than anything else. You don't get any benefits or anything like that. They just like to see that. Okay. You might start a better conversation with your tax officer if they know that your capital is about 1 million. If you don't have that, it doesn't mean that you should inject it if you don't have it. If you don't have it, you don't have it. Okay. The lowest that I've registered a company has been 50,000 RMB because they had very low headcount, very low costs, and they did get revenue within the first 3-4 months of operation. Okay. So it is possible as long as you do your calculations correctly. Remember that in the past, when you were establishing companies, you had to show a feasibility study. Now this is no longer required. So you don't have to show anybody in the government a business plan, financial plan, budget, or anything like that. Doesn't mean you shouldn't have to do it. Okay. And if it were me, I would look very thoroughly at creating a cash flow plan of at least 3 years, so 36 months, to understand how much capital you need, not capital, how much cash is coming in, how much cash is coming out, so that it makes sense for you in terms of the capital that you're injecting. And why do I say doing at least a 36-month plan? It's because the capital doesn't have to come in from day one. Okay, so the capital, so the biggest question is obviously what happens if you don't have enough capital to fund your China company. So when you are investing, I'm throwing a number out there, let's say you've got 1 million RMB. You're obviously going to inject a certain portion of that because you need it from day one to pay off your expenses. But it doesn't mean you need the full 1 million. Okay. There are ways of bringing capital in if you run out, but you also have a time limit on when that capital can be injected. Okay. So for example, if you decide that the term of validity for your company is going to be 10 years, which is the minimum, you have 10 years to inject that 1 million RMB. All right. Now, Your registered capital is also your liability within the organization. Okay. If you are familiar with Hong Kong, you have a paid up capital of 1 million. You've got a paid up capital of $1 Hong Kong dollar. That's your liability. In China, your liability is your registered capital, which is your working capital, which is the amount you're going to be injecting inside. Okay. So again, you don't want it to be too high, but you need to make sure you calculate what you need to physically start your operation so that you don't hit any roadblocks. If you run out of your registered capital, there are 3 options. One, you use the difference between the registered capital and the total investment, which is called your foreign debt loan. Okay. So like I said, there's a 7 to 10 ratio if the registered capital is under 500,000 USD. This foreign debt loan never has to be injected. It's what I call emergency funds. And you need to open a separate bank account within your bank to receive those funds. That usually takes 30 working days. So you've got to be prepared for that upfront time constraint. And the money comes in and then it can be used. And you will have a loan agreement where you're planning on paying back this loan, this foreign debt loan. Okay, that's one option. The other option is that you can increase your registered capital amount. If you've decided that it was 1 million renminbi, you can increase it to 1.5 million, which means you get another 500,000 into your account. Or option 3 is you start creating service agreements to receive funds from the shareholding company. These service agreements, though, can't be fake. There has to be some substance behind them in terms of what they are portraying in relation to the service. Okay. So you can't just create something out of thin air. There has to be substance behind it. But it is a way, if you do have that substance, to receive funds into the entity in China. With option 3, you will have tax liabilities with VAT that you need to take into consideration. So like I said, when does the capital have to be injected by? There is a term of validity that has to be decided upon when you are establishing your company. The minimum is 10 years, the maximum is 50 years. There's no right or wrong between the number that you choose for your operation. Completely up to you. If you feel committed to the Chinese market, I would say go for 50 years. If you are feeling insecure about the project, then I would go for 10 years. 6 months prior to the termination date, you have to do a renewal, which is almost like doing a new incorporation. And it does take about 6 months to get that done. So if you want to have a continuous and smooth transition, you just have to renew your business license in that regard. Like I said, no pros or cons really about the dates that you choose. Just keep in mind that if you input 1 million RMB as registered capital, you choose 10 years. You have 10 years to put in that 1 million RMB. So everybody's goal in China should be to scale up. And the issue is that too many companies fail in the startup. One of these reasons is because they don't have enough capital and they don't have enough financial resources. So it is so important to make that calculation, okay, in terms of what you can actually achieve in China. To make sure that you are on the right path, you've got to be able to analyze. This client that I was speaking to yesterday, who doesn't have a nitty-gritty detailed P&L, doesn't have the ability to really analyze his business. And he openly said that. He's 18 years in the Chinese market. So I would call him a success, but he could have been so much more successful in the market by doing this type of analytical work, okay? In China, you produce your financial management reports month to month, especially if you're declaring your VAT monthly, which you would be if you're a general VAT taxpayer. But what a lot of people do is they don't actually check their budget against the numbers. And this is probably because, one, they're using a local accountant who just doesn't do that type of work. Or two, it's being done by the head office when the reports are being sent over, but the GM or whoever is the managing director in China doesn't get those types of reports. They just get told off if they're not within the budget. It needs to be done locally, all right? And it needs to be done where you are getting your teams and divisions involved so that they know where they stand month to month as well, all right? So when you're looking at your actual income, each month you really should be comparing your actual against your budgeted sales, right? And you should be asking questions. If there's a shortfall, why? Why are there shortfalls? And your sales team should be coming to you with those reasons. If there's high turnover, again, why? If there are timing issues with the income, is it because of VAT issuances? Is it because of late payments or whatever it might be? These are the discussions you should be having on a month-to-month basis with your sales team, and you should be doing it from day one. I want to reemphasize this. It should not be happening 5 years into your project in China. It should be happening from day one. And it doesn't with small, medium-sized companies because their focus is only on sales generation and not necessarily on payment or money coming in or why there are shortfalls or why there are high turnovers. And then they don't have people following up with those customers, right? By asking these questions, even if you've got one salesperson, by having a structured meeting where you look at your sales revenue and you've got the nitty-gritty details of each product, each service, and you're going through it line item by line item, you got to analyze the variations, reforecast the budgets, have those discussions, understand where action needs to be taken. Again, people don't grow fast enough in China because they don't do this type of analytical work, especially when they're small, medium-sized companies. So if your local accountant doesn't do it, then you should be doing it, or you hire an accountant to do it for you. Okay, but that's the type of analytical work that has to happen. It has to happen with your teams and with the people you're hiring. Again, your actual expenditure, you should be looking at your actual expenditure against your budgeted expenditure and understanding if, again, there are any variations. Okay, look at your fixed costs, look at your variable costs. Again, analyze the timings in relation to payments and FAPIAO issuances, etc. Whoever is in charge of the costs, you should be going through these discussions with them month to month to analyze them. What most small, medium-sized companies or entrepreneurs do is they look at the bottom line. There's money in my bank account, I don't care. It's not how you should be operating your business. You should be operating your business on analytical work so you know in which direction to take it, so you can have more money in your bank account at the end of the day, right? But again, not so many people do this during the startup phase. Final tips that I just want to offer. Don't rush the budget creation. Like I said, it will take time to contact all of the suppliers. It should not be something that's haphazardly thrown together and you just have top numbers that are being delivered. Do it right. Have somebody validate it. So go through it with somebody that has China experience to validate that content that is in there, validate the line items. You want somebody to question everything because it might make you think outside of the box again. And you want somebody who's got China experience to come up with certain tips about, for example, how detailed you want your salary components to be, how detailed you want your rent components to be, how detailed you want your marketing and advertising to be, how detailed you want your cost of goods or services to be, right? You want somebody to do that brainstorming work with you that has that China expertise. Be conservative. You know, we all know China is the greatest place to go. It's the biggest opportunity. But we don't want to be too enthusiastic because we don't want to get disappointed by the results. The minute you start getting disappointed, you start getting frustrated, start getting angry, and you keep questioning, why are we ever in China? Why don't we just exit? Well, I don't think anybody should exit China because I think there's a market for almost every product and service in China. But be conservative. right? And again, I'm saying this predominantly with the revenue line items. Always create slack and wiggle room. I almost always think create also a line item, particularly in your startup phase, for emergency funds. Keep a little bit of extra just in case. That would be probably one of my biggest tips to make. Just so you've got spare funds available. And that's the reality. You will need to have spare funds initially in case of anything that might pop up. For us, within the first 8 months, one thing that did pop up was I terminated a staff member, and I had to pay a tremendous amount of termination compensation that cut into my budget. And I didn't have those emergency funds available. And did it impact profitability of the company and how quickly we became profitable? Of course, and that happened in the first year. So having that slack and wiggle room is really important. Start early. So again, I'm going to reiterate, the fiscal year in China is January to December. So when you're creating your budgets, think about when your company is going to be established. Start from that point till the year end, and then start fresh the following year. And like I said, you should really be doing a plan that's about 36 months. So you know exactly how much capital you need. When you are redoing your annual budgeting, I always say start by October. Usually we always start right after the October holiday, just so that, again, we've got time for discussions and brainstorming and all of that might pop up, so that really by January 1st, because you've got to account for Christmas holidays, New Year's, Chinese New Year, that really by January 1st, everything is up and running. The goal is to monitor, evaluate, and reforecast. And again, I did not do this month to month prior to COVID. I was doing it every quarter. I've now gone into the transition and the habit of doing it month to month because of COVID. Budgeting is not something you do. You've got a beautiful document and then you put it in a drawer and you forget about it. It's something that you use, that is it's a working document that is consistently worked on throughout the year, to better understand, again, how much cash is needed, to better understand in advance where you're spending your money. And again, for smaller companies that are starting off in China, it is important to have that budget as a control mechanism so that you are not overspending. Again, it's a very big trend in China to overspend within your first 3 years of operation. Your goal should be to break even in your first 3 years, if not 5. But after 5, you should start generating revenue, if not sooner. But in general, you want to really break even maximum by the 5th year. So this is important to understand. You want to constantly monitor, evaluate, and reforecast it. And if you don't have the time to do that, then you need to place emphasis on that and delegate something else to other people so that you have the time and ability to do that. That's the end of today's presentation. So I hope you were able to come away with an idea of how to calculate your registered capital, how much money you actually need to get into the Chinese market, to utilize as your working capital, so that you don't run into any issues in terms of paying off expenses, where you then get into situations where you evaluate whether China is really a market for you or not. If you still have any questions in relation to registered capital, working capital, the idea around budgets or whatnot, please do let me know. But I would love to know what people's takeaways were. Again, you can add them into the comments section in the YouTube. It'd be great for me to review those. How we can help you is we can offer education and advisory on doing business in China. We offer market research, business plan, and budget creation and validation. Like I said, I've just recently done a budget creation for a client. We do trademark registrations and corporations, and obviously the implementation and growth services as well once companies are a little bit more established. If you would like to book a strategy session with me, I'm just going to keep this slide on a little bit more. The easiest to reach out is through my email, which is christina@woodburnglobal.com. You can also connect with me on WeChat with my name. And then you have the other links as well. And then don't forget, we've got 3 more sessions in this webinar. Tomorrow, we're looking at the importance of the registered office address, how to appoint the right people in your China company, how to open your corporate bank account in China, and the insights around operating that bank account in China, and what you have to think about, not just from the opening process, but actually operationally from a day-to-day, what it takes to operate your bank account. If you haven't registered for those webinars, you can do so at woodburnglobal.com/events. So that's the end of today's presentation. Thank you for joining me. And for those of you that will be watching it on replay, I hope this presentation was useful to you. I hope you have a wonderful afternoon. Take care and goodbye.